Okay, guys, it looks like the whales have finally woken up and BTC potentially is getting ready to break out of this very tight range that it has been sitting in for about 10, 11 days now. I mean, I think it's almost 2 weeks, right? 12 days so far. We've been down in this tight range. Potentially there's been a whale accumulating through here, and it looks like they've started to show their hand. Now I'm just going to go jump across and look at some of the second level data here. And you can see that this is the large account sizes here. And just pretty much maybe about 2 hours ago, they started to buy very aggressively. So this is the CVD, cumulative volume delta. And basically that is telling us who is market buying versus market shorting. When the line goes up like this, it's telling us that there's more market buys coming into the market for large accounts. And you can see that much later in the piece now, the normal size accounts and the small accounts are starting to curl around, and they're starting to buy only just now as we're sort of coming into, possibly, the top of the range. So, the breakout buyers are coming in here as we get to the range highs, which is how the market should operate. So this looks like healthy market. The whales are moving it from the range low up towards the range high. Now it's going to be interesting to see if whales start to unload here into our smaller accounts and normal size accounts when they start buying. And we can see here, back when we had quite the large accounts buying quite aggressively here, we had a lot of shorts coming in here, a lot of selling coming in here on the small accounts and the medium size accounts. And now we're starting to see some selling pressure coming in here a few bars later. In the last bar going in, we're seeing some selling pressure coming in from the large accounts as the smaller and medium sized accounts actually start to buy here. It's always funny to see how the two operate backwards and forwards with each other. And, we're seeing the smaller size accounts trying to buy that range high, looking for the breakout. And we're starting to see a little bit of distribution on the low time frames anyway. But it's all about the daily close now, and if the whales want to push it through. So it looks like we're building a falling wedge here at the moment. This could easily push up and then come back down one more time, hit that 25K mark we've been talking about a lot. Then we sort of get a, V-shaped reversal, something like this. And that could end up timing up perfectly with, the deal getting done to raise the debt ceiling, which is supposed to be due. The last I read anyway was due on June 1st. But it's sort of like a floating, it depends how much money the government brings in through taxation and stuff like that versus how much outlay they have. So it's basically like their cash flow balance. They're expecting it to hit zero on the 1st of June. So there's sort of a bit of pressure on the politicians at the moment to try and get a deal done in time. But basically what is happening is the Republicans are squeezing the Democrats to try and get things that they want passed through a bill. They call it a spending bill, but it's all BS anyway that happens. And they're trying to get all back end stuff that hidden from the public deals while everyone's focusing on this. They try and get other stuff done and push through that the Democrats don't want, because they've sort of got them. It looks bad if the Democrats and Biden administration don't get a deal done to raise the debt ceiling. It looks bad on them. So it's basically, the Republicans in the House at the moment, they're holding all the cards and putting the pressure on the Democrats and the Biden admin to give them what they want. Otherwise, they can hold out and not pass the bill to raise the debt ceiling. Eventually, it'll get passed. Just depends how long it takes, and if we end up having a government shutdown and all that sort of stuff happening, which could spook the market. So we need to be a little bit careful of that. But in my opinion, even if we get a dump over something silly like the government shutdown or the default and all that blah blah blah, it'll just go back to normal as soon as they raise the debt ceiling anyway. So in my opinion, it's a bit of a nothing topic. But anyway, probably about 7 to 10 days out from that resolving. And in my opinion, it could end up leading to a bit of a pump in the markets once it does get resolved. But with stuff like this, we never really know what's going on, because it comes down to what the big hedge funds do and how they react to it and how they set their algorithms up to respond. Okay, so we're just going to have to wait and see how that all plays out. I'm not going to try and predict what is going to happen when the debt ceiling finally gets raised. That is for sure, because anything could happen. We just need to be prepared of it, know our key levels, know where we want to be buying, know where we want to be hedging or selling, and all we can do is respond to the market moves, okay? At the moment, if we're going to break this down to really basic level, though, I would say that this is building a high time frame, or I should say daily falling wedge, right? And really importantly here is we've got this really tight range in here. We've got a bullish divergence here on the daily time frame. Stochastics just had a crossover, and that's looking to start moving up with this Morningstar reversal. And the Morningstar reversal is my favorite candlestick pattern to be looking for a reversal out of the end of a range. I always look for a Morningstar reversal, a really big solid pin bar, or a bullish engulfing, right? And sort of this pattern reversal that we have here at the moment, there's still 20 hours to go though. So it's not 100% confirmed. It's not 100% locked in. Need to be careful we're not jumping the gun here, because this could end up coming all the way back down and it leaves a really big wick, something like this left over, or, you know, a big wick like this, and we end up closing gray or red, for example, right? But at the moment, all we can do is go off current time frame price action. And tomorrow morning, if we close somewhere like this daily candle through here, that's going to be giving us a bullish engulfing Morningstar reversal. So the bullish engulfing Morningstar reversal, in my opinion, is the strongest indicator, especially on the high time frames, of a breakout into a new trend. And usually it's the Morningstar. So we have the Morningstar here, right? It closed pretty much exactly on the 50% of this candle. So for the Morningstar to be confirmed, needs to close above the 50% line of the down candle. And you can see here it closed literally maybe like 1% under, right? Sometimes those end up breaking out anyway, and you have a candle that looks like this in the next candle, and then that's fine. And you end up getting the breakout anyway. But obviously, we didn't have that, and it had the pullback candle, and we stayed inside that very tight range. But this one, if we're going to get a breakout and close very far above, almost double the height, it's probably almost a one-to-one extension here of this daily candle body, right? So if I can line that up, I don't even have the one-to-one turned on. 1 second, let's get this turned on. Okay, I'll have to figure that out later, but I'll have to play around. For some reason, it's not showing up, but I'll have to have a little bit of a tune up with my Fibonacci levels. But that's pretty much a one-to-one extension through there. Oh, this is how you do it. My bad, my bad. It needs to be showing as a 2, so I can do the 2 point. Right, so that's up to there. So all we're doing here is we're measuring from this point here to this point here, and then we're looking for the number 2, which is pretty much the one-to-one extension. Okay, so basically what we're seeing here, it's been so long since I used my Fibonacci. Usually to get the one-to-one extension up, I would go in reverse. Whoops, I go up. I was going in reverse that time, so it wasn't showing up. And there's the one-to-one extension there, right? And that's pretty much showing up perfectly on the range high level through here, which I've put in from candle closes on the 4 hour, okay? So we're looking for around that hour. I probably should be dropping this down, to be honest with you. But we're looking for the 4 hour range highs through here. There's a few order blocks, right? So need to be aware of that. Right, need to be aware of that. There's these 2 order blocks through here that price hasn't really liked getting through any of these order blocks, right? There's in this one from this candle that was put in here, and that's pretty much rejected price multiple times through here. So you can take this one here or these 2 if you want to. This one isn't highlighted, but it's still an order block. If we can break back above that, that would be really strong indication that we're breaking out of this range that we've been in for 12 days, and we'll be getting it above 27,500, right? Above 27,500, we're looking really good. And then the next target's going to be up here, 29,500, and then up the top here, pretty much around 30,500 as well, okay? So That's how you track those falling wedges. It's always the middle hump and then the top when you come up to these. So when we track our falling wedge, we have the multiple touches inside, and sometimes these need to come down one more time like this, right? But I feel like this one, because we've got the daily, it's been chopping so long through here, and we've got the daily divergence as well. I would say most likely this will just push up, and then you got target 1 here and then target 2 through here. Right now, if we can clear the range high up here, a lot of work to do that, to be honest, to clear 30,500. If we can clear that, then I think that the key target we're going to be looking for is pretty much 37,500 up to 38. Okay, so that is the area I'm targeting for. But if this is the current low, it matches up perfectly with Bob Lucas's cycle theory, because that was a 69-day cycle through there. And then this was going to be ending up being the 63rd day would have been the low through here. So, it's not always 100% accurate, and, this can always roll over, but it does just help us look for timing bottoms with the cycles. And that looks like a pretty good one to me. It seems to be that the whales are waking up, right? And we can see that with the whale buying very aggressively through here, moving the market up at the moment. Let's go just have a look at that versus the perps. So you can see now very aggressively as we're moving up through here, the medium and small accounts are shorting like crazy, while the large accounts are longing very aggressively. So not very good sign for the small accounts, because obviously the whales do control the market. So that gives me extra confidence that this is probably going to end up closing pretty high, and there's going to be a whole heap of shorts trapped in this area through here, and we can look to push up higher and take out these two key levels. And you can also see where our targets are. There's the 2 order blocks through there, and usually I'd be looking for the top of those 2 order blocks, right? So which is pretty much 29,500 and 30,500. Okay, so that's pretty much what I'm looking here for BTC. On Ethereum, it's basically the same story. Okay, basically we've got this falling wedge happening at the moment. We could have one more pullback. We'll have to wait and see if that happens. I think this is a pretty nice area at 1710, but this could also always just be a 2 hump falling wedge, right? So instead of getting 5 touches inside the triangle, you only get 4. It's sort of similar to what happened back here. We didn't get the extra touches inside the triangle. I mean, this sort of had like a little hump back there, but on BTC, we go back and look at our chart, it wasn't as many touches inside the triangle, but we did sort of have this weird smaller thing in the middle there. But you could argue that, right, it was 4 touches. So yeah, similar sort of pattern showing up here at the moment. I know a lot of people don't like pattern trading and say it's outdated and blah, blah, blah. But at the end of the day, on the high time frames, it works really effectively. I mean, look at how strong this falling wedge from back here on Ethereum and BTC both ended up playing out. If you caught this one, there was a 55% move in there. I think on Ethereum, this can definitely come up to our daily order block up here, somewhere around 20. I should say 2,200, all the way up to 2,340. Okay. So yeah, that is, I think, the next level of resistance. If it breaks out from here, we could get a nice move, which, it's been pretty nasty trading through here. That was a really nice push up through there, but, pretty much since the middle of April, it's been almost a month, 36 days of just like backwards, bleeding out chop. Hasn't been that nice for the bulls. So it looks like, the time for the bulls might be getting ready to shine, but we have to still get the breakouts here. It's not yet ready to go, that is for sure, or to 100% confirm. It's been really interesting to see the NASDAQ and how that's playing out, to be honest, because we had a nice little run and strong breakout through here. Really strong breakout this morning, but that is actually started to turn around. And I don't like the look of this, to be honest. It's a really nice swing failure pattern of the range highs. And if we go down to the lower time frame, we look at the 5-minute chart. We had our initial balance range, or some people call that the defining range. It's basically the first 1 hour of trading for the Asian market. And then we've had the breakout from there, swept the range highs in one really big aggressive candle, right? And then we're broken back to the downside. Now we're trading underneath the range low. You see we've got the statistics up here for the ADR. That only happens 76% of the time. So 25% of the time after trading above the range here, you will trade below the range in that session. And that has happened, which isn't usually a good sign. So we call that a failed DR session. And it looks like this wants to continue to roll over. But we'll have to see how the rest of the day ends up playing out. But I think it's important to watch this 4 hour here on the NASDAQ, because BTC can be very tightly correlated to the NASDAQ. Right. At the moment, it doesn't seem to be, because we're pushing pretty aggressively on BTC while the NASDAQ is having a little bit of a pullback. But when the NASDAQ did initially push, we did have BTC pushing with it. Okay. So that's the same story on stocks as well. Sort of getting rejected from the range high here. Right. That's never a good sign when you're trading above key level through here. Right. All these levels through here. And you get rejected perfectly from the range high after just sticking your nose out the top. So I want to see these levels get cleared soon. This could just end up pulling back and forming a flag and then going again. And that could be the same thing forming here, right? We've got a really nice bearish divergence. So it's looking very toppy at the moment, to be honest with you. Right. I should say like a local top anyway, that could end up just pulling back like this and flagging and then going again, right? Similar sort of price action, something like this or through here, or even, more of a falling wedge, right? This is just a lower time frame falling wedge, a bit of a more of an aggressive one, but really nice entry on the SFP here on this candle for the reversal out the top of the range. So that'll be one to keep our eyes on, but this just looks like, it's tried to make a new high and been rejected pretty aggressively. We'll have to see how that ends up playing out for the rest of the day, as that could set the tone for the Tuesday session, usually sets the tone for the rest of the week. So we'll have to keep our eye on that. Gold is probably one to keep following as well. I think this is going to get ready to just continue to chop sideways, but it's interesting to see gold actually pulling back or rolling over after trying to make a bottom through here. Stocks pulling back as well, and crypto pushing. You don't really see that too often. Dominance just looks like it wants to keep chopping sideways through here. So I'm not really looking to get into that many alt trades at the moment. But I will be keeping my eye out. It's always good to look and see what, so this is Microsoft. So it's good to look and see what MicroStrategy is doing as well, because this is basically a Bitcoin, I was about to say hedge fund, but it's basically a Bitcoin ETF, right? Holding ridiculous amounts of BTC these days. It's always good to see how that's faring as well. And we did have a little bit of buying in the last week as well on the 17th. So I'll keep my eye on that this week as well to see how that ends up playing out, right? Because if you start to get a move up through here, that could also be an indication that BTC is getting ready to move also. I just wanted to go and take a quick look at a couple of altcoins. Right, so Litecoin still can't get above $100. Pretty nice weekly close back there, and then a push on the daily time frame. It still has a fair bit of work to do, but it is good to see that it is sitting above the neckline of that head and shoulders back there, and this just looks like it's building into a larger range, potentially setting up for a ascending triangle through here. So we need to keep an eye on that. A clean break above 100, 103 could be pretty nice. And it would just be an inverse of this breakdown through here, which was a descending triangle. Okay. So descending triangle through here, breakdown. And that was like a 50% breakdown, right? 60% breakdown. So, a break up from here could be, 60% breakdown to maybe touch this level back here. And that could be ending up to come in by the end of August. I think it's August 6th that the timeline is. I think I have it on this chart here. This is a chart I was expecting to pull up. August 6th is the halving. So that's interesting, something to keep your eye on. Altcoin's definitely moving up at the moment, but I think it's still probably premature for sure. I mean, Rounder, this one is a coin that just seems to pump so aggressively every time there's any sign of upswing at all on BTC. So it's one to keep your eyes on, that is for sure, because it's definitely outperforming. I always like to watch the coins that are outperforming every time there's an up move in BTC or Ethereum. Okay. Other one that's interesting to keep our eye on at the moment as well is Solana. Because this is sort of holding this range low through here. It's going to be interesting to see, sort of just like swept that, if it can reclaim pretty big falling wedge potential play through here as well. So that's, I think, one to keep our eye on for our bullish divergence also. Let's have a look on the daily time frame. No bull div on the daily time frame, but we do have that same Morningstar reversal type setup. If that can break this downtrend through here, then we might be looking for more upside back to the top of the range. Okay, and a lot of altcoins sort of looking similar. Some of the other altcoins that we've been looking at recently, though, like ATP's just been bleeding out quite aggressively. I just keep my eye on this downtrend channel to see, what that does. We could see a little bit of a reversal off here though, because that's, got this one daily order block through here. If it is going to get some sort of rally off here, trying to put in a double bottom off that, I see that happen all the time in altcoins. Could at least get some love out of that. For some upside move, maybe up to check this daily order block, right? It's a decent move on that. It's not a bad risk to reward trade, to be honest, because your stop loss is actually quite close to current price at the moment. I don't know what's going on with my risk to reward tool at the moment. But yeah, nice 5R setup, potential there on APT. And that is if BTC does confirm to break out today and not end up just pulling back and having a really big wick left on it. And then let's take a look at sushi, because that is back down at the range low. We potentially, guys, are putting in a spring action here on sushi right now at the range low. If you've been following my videos for a little while now, I've been talking about the Wyckoff accumulation, right? And basically, you have the sideways range through here, the bleed out, then you go into the spring, the reclaim. So at the moment, this can easily just get rejected and roll over from here. And then you go into a new range through here. It takes even longer before we actually get the breakout. But if we can get a reclaim of this range, and then sometimes you get a retest, or you might get a nice big shot up into here, and then a retest comes in at this level instead of down at the very bottom of the range. And then, you get that move up to the range high. And that would sort of line up perfectly with a falling wedge through here, just peaking at the bottom of the range. And a lot of altcoins are looking similar. And this is the sort of area that you want to be getting into them on the reclaim of that level, right? Alluvium is one I want to look at in a second. Link sort of back to the bottom of the range as well. All right, we'll keep our eye on that. I might just go LDO as well. Bit of a pullback after sweeping the range low. This is one to keep our eyes on. It loves to outperform when altcoins finally move. Keep my eye on that, but wouldn't be taking a position anytime soon. It's difficult to think to draw the trend line, but I think that is the most obvious area. If we can get back out of that trend line, maybe it's got something in it, but still a little bit, still a little bit sus until it can confirm above 2.3. Let's go and have a look at Alluvium as well. I think this is a really good example through here, right? So if it reclaims this level, could be getting interesting, but I would just be careful unless we do get, some really big altcoin love through here. It actually is starting to break out of the downtrend, which is interesting. That is for sure. I mean, there's always the potential for, this type of trade set up through here up to here, or if we do end up pushing back to range highs, something like that, or if you wanted to try and be sneaky, you could get the larger risk to reward and put the stop loss right underneath these double, the double doji reversal through here. This is basically a Morningstar reversal, just with 2 candles in the middle, right? And sometimes that's the case because, you know, on the higher time frame, like maybe if we went up to the 2-day, there's just 1 doji in there, right? So something to think about as well. Anyway, those are putting bottoms a lot also. If we can get the close above here, right, that is our bullish engulfing Morningstar reversal, right? But ultimately for me, I think I would rather take the setup of sweeping the lows through here, but you never know, that might not come. So yeah, that is one to keep eyes on as well, I think. And that's pretty much it for the altcoins that I wanted to cover. Let's quickly go and have a look at total. Right, so total market cap looks like, you know, basically a mix of Ethereum and BTC, which shouldn't be any surprise to anybody. But, you know, we get the breakout of that falling wedge to the upside, you know, and I think we're pushing at least back to 1.2 trill. And then, you know, if we do get some more bullish price action for whatever reason in the economy, this is still the main target. Probably going to see some issues at 1.36. Let's go and have a look at some of the economic factors. What is going on with yields at the moment? Been pushing up pretty aggressively recently as well. Right. So it's interesting to see that the stock market has been pushing while yields have been pushing aggressively as well. Financial conditions continue to tighten, right, which is a good sign to continue to bring inflation down. But there are, if you look at Truflation's numbers at the moment, they are signaling that potentially we're about to go under 3% soon. And usually the Fed's numbers are about 3 months lagging behind that. So that puts us you know, end of pretty much what, September. You know, we could be looking, you know, a September, you know, or late August or September reading, September, October, definitely under 3%. Because sometimes it's 3 or 4 months behind that the Fed is from the Truflation numbers. So let's end up seeing how that ends up playing out. But yeah, DXY is the other one to take a look at here. And even though stocks have sort of pushed, it hasn't really made that much sense with the stocks pushing and faking out quite aggressively. BTC having its pretty nice push through here, thanks to the whales pushing us up, with the NASDAQ and ES sort of faking out there as well, looking fairly bearish, and also gold selling off. It's interesting that, you know, we haven't really had a pump out of the DXY as well. So pretty much the only thing that's really moving at the moment is BTC. I wouldn't mind if that continues to play out, but let's see what happens. I think DXY potentially wants to come all the way up here and then probably fake out the top and come back down. So, you know, once we do get a rollover in the DXY, that's when we usually see more upside in BTC, okay? All right, guys, thanks a lot for tuning in. We'll see you all in the next session.